Well, hello and welcome to this special edition of Young Turks. I'm Shireen Bhan and we're back with Adit Palicha of Zepto. We last had him in August, and the reason why we're talking to him today is because they've raised another fairly significant round of money, about $300 million, and this is all domestic capital led by the likes of Ramdeo Agarwal of Motilal Oswal. Adit, good to have you back. You know, when we spoke in August, you said you're not looking at raising any more money. What's changed?
Well, firstly, thanks again for having me, Shireen. It was wonderful being here in August. It's wonderful being here 3 months later. It feels like a lifetime, right? But, you know, I'll start with this fundraise. So, yeah, we raised over $300 million. It's the largest 100% Indian fundraise for a private startup in the history of this country, right? And we are proud of it. The reason why, you know, when we started this financing, we had over $1 billion of net cash in bank, no debt, right? We're growing well. And the reason why we raise this capital, candidly, is because, you know, throughout the entire life cycle of Zepto, we've always wanted to bring on board domestic capital. Both, you know, Keval and I are excited about the fact that we can build like a, you know, an Indian company that people can be proud of. But there never really has been risk capital of that scale available to private startups. And so, you know, we pushed, I remember from the Series A onwards, Series B, Series C, Series D, we tried to get domestic investors on board, but it wasn't the right time. We saw an opportunity here with Motilal Oswal and their team, and, you know, we went into it not really with many high expectations, but we were able to put it off, and we're quite excited about it. And the rationale behind, you know, doing a domestic fundraise is fairly simple. You know, we had over $1 billion of cash in bank. Now we've got over $1.3 billion of cash in bank.
Yeah.
But this domestic financing just helps us increase Indian ownership going into an IPO. We think that benefits the company long term. One, you know, just public trust and shareholder trust going into a public company. It's better to be owned by high quality Indian names, right? And, you know, historically we've been limited to Silicon Valley VCs that are not very familiar, or that Indian institutional investors and Indian retail shareholders as well are not familiar with. And B, even just from a, you know, regulatory and government lens, we think being an Indian company is favorable. And lastly, it's the ambition that Keval and I have always had to build like an exciting Indian company.
But is that the real rationale, you know, of being Indian owned, so that the FDI regulations, especially the FDI regulations to deal with retail and e-commerce, don't necessarily constrain you?
So, number one, I mean, you know, even today, we are 100% compliant and respect FDI laws. Like, we've, you know, essentially maintained the same successful e-commerce models that have existed in this country for over a decade, right? And, you know, we've built a lot of depth, not just in FDI compliance, whether it's, you know, for a fairly young company, having a Big Four statutory auditor, right, with, and, you know, pulling off a financial year closure with no qualifications. You know, that's one example. Whether it's GST compliance, whether it's income tax compliance, whether it's even, you know, our best efforts on FSSAI compliance, we've worked hard there. So we're not, you know, we're not concerned by FDI compliance. We feel confident in the work that we've done, and we're compliant.
Not necessarily compliance. What I mean is that do you feel that the FDI regulations don't give you the flexibility to do the kinds of things that you may want to do? Because we're given to understand that this is what Zomato is looking at as well as it grows out Blinkit, and which is why they did this big fundraise as well.
Yeah, no, look, it's less about the FDI rules opening up more business avenues. It's more about, you know, being an Indian-owned company and putting that debate to rest on, you know, as we get to larger and larger scale, is this an Indian company or a foreign company? I'll give you a line, Shireen, right? You know, we are not Amazon or Walmart, right? This is in spirit an Indian company, Indian entrepreneurs, Indian management team, Indian board, you know, hoping and will get listed in Indian public markets soon, and will, by next fiscal year, be a fully Indian-owned company, right? In just, you know, a little over 3 years since we started this company, right? So, you know, in spirit, we're an Indian company. There's a debate out there, is this Indian, is this foreign? We are actually an Indian company. The only reason why we took, you know, capital from Americans is because, you know, there's not many people that will give 25 crores to two crazy 18-year-olds in India, right? That kind of risk capital doesn't exist in India, frankly speaking. It does exist in a place like Silicon Valley, but it was never our intent. And that's why, you know, there's a big difference between us and, let's say, a Walmart or an Amazon. So it's less about, you know, the specifics of rules.
Yeah.
You know, even after becoming an Indian-owned company, our business model is not going to change. We're going to continue to be an e-commerce company, right? We're not going, you know, we are going to continue the business model, but just puts that big ticket debate to rest because we feel like we're going to get to good scale.
Is that debate that you speak of impacting operations in any form or fashion? Is it putting you perhaps under more government scrutiny at this point in time?
Yeah, so it has had zero impact on the business, and candidly speaking, other than the media noise, and we're used to a lot of media noise since inception, right? A lot of hyperbolic narratives since inception.
Well, for you, there's mostly been praise so far.
No, you don't remember 2022, 2023 article?
That was in general, that whether quick commerce will work, not work, and so on and so forth. It wasn't specific to you.
No, that's generous. There were specific obituaries on our company, which is good, which is part and parcel of building a company, and that's okay, right? And I understand that. But yeah, no, I mean, I think we started with, does anybody even want quick commerce? There was a survey, 90% plus Indian consumers don't want 10-minute delivery. I still remember that. I can cite that, for your viewers after this. There was, 10-minute delivery is killing the delivery drivers, right? It's bad for delivery drivers. Then we actually put out the data and said, guys, our accidents per million kilometers is lower than all the other formats of e-commerce because most accidents that are fatal happen on highways and freeways, and most of our operations are in artery roads and neighborhood roads, right? And so actually our accidents per million kilometers were lesser. Or let's say quick commerce would not make money. And then we proved, 70% of our dark stores hit profitability. The industry moved towards profitability even while growing. And now this is another narrative, right? So it's that quick commerce is hurting the Kirana store and is not good for India. Just like all the other narratives, right? This is just another anecdotal hyperbolic.
But let's address the narratives with facts, and I want you to put the numbers down on 100%. The table, because KATE, which is the Traders Association, has basically told the government as well as the general public that quick commerce is bad. Quick commerce is going to kill the Kirana stores. That quick commerce is taking away jobs at this point in time. I want you to first. There is discounting. There's a whole plethora of charges that have been made against quick commerce in general, including each one of you. Now, I want you to address each one of those aspects. Let's start with the discounting issue, because that is something that the government also is concerned about.
100%, and let's go through them one by one. Would love to do it, and we're data-driven guys, right? So we'll make it happen. But the first one is competitive pricing. I'll give you an exact data point. So that allegation is false unequivocally by data. If you look at the exact number of units sold on the Zepto platform in FY24 that was below COGS, it was 0.2%. Only 0.2% of our units were sold below cost price of the manufacturer. 99.8% we were making margin on it. 99.8%. Right? Even in the stores that we had.
And who's verified this?
This is EY verified. I'm happy to I'm happy to go publicly and say, anyone that wants to diligence this, please come into our office. Let's look at the books, right? Because we've got data and facts, and there are anecdotes and hyperbole, right? And we're on the side of data and facts. So 0.2% of our units were sold below cost price in FY24. We don't expect the number to change in FY25 much, but we've got book closure numbers for the full year FY24. That's one, right? Even if you look at the stores that we were profitable in, which we turned hundreds of stores profitable, and it's a well-regarded fact, even the market, the investors that came in here, investors like Ramdeo from Motilal Oswal, or all the Ranjan Pai from Manilal Group, that diligence was done in our stores. Even in the markets that we were profitable in, we were meaningfully lower than MRP. So are we predatory pricing? The answer is no. If you look at it, we've created structural deflationary value. We've cut out all the inefficient middlemen that exist in the value chain for grocery, the distributor, the wholesaler. We go straight to the manufacturer. We're procuring millions of products at scale, getting it at a better price. That goes into the platform at a better price for the consumer than MRP, cutting out all the inefficient middlemen that have been sucking out value, and the consumer has had to pay at MRP. So we've structurally reduced the price. We've been able to turn our stores profitable, and that means we're not predatory pricing. We're actually deflationary, right, for tens of millions of consumers. So that's a headline. With zero predatory pricing, quick commerce is deflationary. We can prove it in the profitability that we have in our store P&Ls. We can prove it with the number of units that were sold below margin, right? We've got all the data. Obviously today, we're expanding on a base of, billions of dollars of scale. We're investing in CapEx. The biggest singular line item today in our P&L is CapEx, directly or indirectly. Right? Not all of it shows up in fixed assets. Some of it is in an OpEx model to go into the technicalities. But if you look at the capital being deployed, the biggest part is CapEx and working capital. The second biggest part is operational setup. I just mentioned it to you, right before this meeting. We just added 25,000 jobs in the past 90 days since the last time we spoke, right? Which is unbelievable, right? We've gone from 0 to over 100,000.
What kind of jobs are these outside of delivery partners?
So delivery partners are the biggest one. Then you've got pickers and packers in your dark stores. You've got the line haul, the truck drivers, right, that help in the supply chain. You've got the back-end supply chain. Let's say the packagers for the fruits and vegetables that you get. Most of them are women, by the way. You've got the local entrepreneurs that run our stores. Actually, next year, majority of our stores are going to be run by local mom-and-pop entrepreneurs, not some big guy mom-and-pop entrepreneurs. And then you've got the rub-off impacts, the D2C entrepreneurship that we create, all-Indian entrepreneurship, the companies that have been created that have scaled on Zepto, and the people that they hire. So as an industry, to give you a sense, we've gone from 0 to 4.5 lakh jobs in 36 months as an industry, quick commerce. Zepto alone has created over 1 lakh jobs, right? Which is something we should celebrate. And if you look at the wages of these jobs, Shireen, right to your point. So one, the first question you mentioned, are we predatory pricing? Answer is no. Happy to go into the data, happy to go into our books in detail. 0.2% of products below margin.
Okay.
And stores profitable, still below MRP, because we're deflationary. We've created value in the supply chain. That's one. Second piece on jobs, created over 4.5 lakh jobs. If you look at the wages of those jobs, the average wage of all the people that have been in the system that I mentioned, from the delivery partner all the way to a truck driver to the pickers and packers, etc., and the farmers, we've got over 10,000 farmers that are the plurality of their income today in the country. The average wage rate is 23,200 rupees on Zepto. You extrapolate that to the industry, and it's quite a lot of wages. To give you a sense, when we did a survey of our delivery partners, we have the data as well. The most common thing that they were doing before they were on Zepto or Zomato or Swiggy or before gig work? Yeah. We put a lot of demonization of this. But you know what the most common thing that they were doing before it? Nothing. They were unemployed. This is young, urban males, urban youth, 10th or 12th pass education, no formal history of employment. That was the first thing that they were doing is they were earning 0. They were unemployed. The second most common answer is they were engaged in some form of informal employment where it's factual and it's been covered by credible economic studies that in the informal sector, things like minimum wages are not adhered to as much as we'd like, right? And so we've got, we've estimated, and from the surveys that we've done at scale, statistically significant, that, even the people that were employed were making 10 to 15,000 rupees per month. And now they're making 23,000 rupees per month, right? So we're a net job creator. We're net wage additive. And, we're not predatory pricing. But I'm happy to answer all the other pointers you mentioned.
On the specific issue as far as the Kirana store is concerned, because as you pointed out, you've done away with the middleman, so to speak, in your words, which is added to the efficiency. But that's one of the complaints that Kate is making, that this is an unfair playing field. Now, do you envisage a future where you can co-opt or collaborate with the Kirana stores? Will you, in fact, strategically look to do that? You talked about creating these mom-and-pop entrepreneurs, but will you look at co-opting or collaborating with the Kirana store ecosystem, because that then also allays the concerns that are being raised?
So, Shireen, one, an unfair practice is predatory pricing, like just selling below your price to source so that you can choke the market. Are we doing that? No. But what is fair is building structural value, building supply chain efficiency, going straight to the manufacturer and giving consumers lower prices and acting as a deflationary force on day-to-day household essentials and goods.
Yeah, right? Their point is that they're not being able to do that. So
I know, but I'm saying that, if you look at it, that's actually real structural value, tens of millions of consumers, deflationary, right? So, and the stores were turning out profitable. So is that a net positive? I think it is, right? But to give you a sense, I'll give you two things on the Kirana store. One, are we replacing the Kirana stores? You mentioned, CAIT, right? The Commission for Traders. Today, if you look at the same reports that Kate white paper cited, right? They cited a Datum Intelligence report. In the Datum Intelligence report, it said quick commerce has taken $1.2 billion of sales from the Kirana store, right? That same report, go to page 6 for the viewers, right? And we've done this research ourselves, go to page 6. That same report says, in the same breath, that between FY23 to FY24, India added $46 billion more grocery consumption year on year. And in the next 5 years, we're going to add $200 billion more consumption. So that report is to be believed, right? The report that Kate is citing, right? And this is consensus view. You look at the Goldman Sachs report on consumption, look at Invest India. It's a consensus view. The economy is growing, the fastest growing G20 country, G20 economy in the world, or one of the fastest. We added $46 billion of consumption, FY23, FY24. That same report, if you've taken $1.2 billion of sales, but the economy added $46 billion, where is the remaining $44.8 billion going? Where is it going? It's going to mostly the Kirana store. So we're growing, there's no doubt about it. But the Kirana stores not shrinking, they're growing as well, right? And if we, if you look at the incremental $200 billion of consumption that we add from FY24 to FY28, and I don't think, even Kate would make the assumption or make the statement that India is not growing. Clearly we're growing, right? The $200 billion of consumption that we add, even today, quick commerce does $6 billion, broadly, Blinkit, Instamart, Zepto, of top line. Even if we grow 1,500% in the next 4 or 5 years, which would be at a basic, very difficult thing to achieve, even if we grow 1,500% from 6 billion to 90 billion, we will be less than half of the incremental consumption, that 200 billion that's been added to this country. Where is that additional 100 billion going? Mostly to the Kirana stores. So, and I'll answer the question on inclusivity as well, if you give me a minute, right? But the Kirana store is growing. We're also growing. Again, it's just a hyperbolic narrative. It doesn't even fit in the own data that's been cited by the people that are making these arguments, right? And again, like I mentioned, we're used to these narratives. We're used to 10-minute delivery nobody wants, 10-minute delivery doesn't make any money, 10-minute delivery is killing the Kirana store. These are all just narratives that don't have data behind them, and we've proved time and time again that the narrative about quick commerce are wrong. This one is wrong. But to your question, just coming to that, which is on, can we make this inclusive? And genuinely, that's our intent, right? Today we've got 10,000 plus farmers that work with Zepto, whose livelihoods have improved because we give them stable, consistent income with transparent pricing, which they don't get from the local market. I meet these farmers, I've spoken to them myself, right? They don't get those prices from the local market. Because they get stability for multiple years, they're able to take financing and expand their farms and make more income, right? And we're going to put out studies on this as well, so you'll see this. But that's one. On the Kirana store specifically, today, hundreds of our dark stores are run by local mom and pop entrepreneurs, right? And you've got, let's say, an ex-restaurant store owner in Noida, or a person that used to run a small car wash operation in Nasik, right? Or even a Kirana store owner, right? There's one in Andheri, right? People that take a relatively small amount of capital, start a Zepto dark store. We give them the technology, we give them the manpower support. They run the store, they employ people in their local community, right? And they make money, and they're making today. For example, that person I mentioned, one example is a local entrepreneur in Noida, Kiran, whose family was about to go bankrupt. She took a small loan, started a Zepto dark store, and today she makes net of that interest that she has to pay on the loan. She's making 1, 2, 3 lakhs a month, and it's going up. And this is all formal. She's employing 30 people from her home state of Haryana, from her community, right? And it's PFESIC compliant employment. It's above minimum wage. She's making good money as an entrepreneur, and that's inclusive growth. So to give you a sense, we're willing to commit today that the majority of our dark stores within next financial year are going to be run by local entrepreneurs. And this is again not some sort of gimmick. These are actual local entrepreneurs. We give them the technology, they start a Zepto dark store. So that's the way we look at it.
Let me ask you this, Adit. As you pointed out, you raised $1 billion. Before you raised another 300 million. Now, what do you want to do with all of this money at this point in time? And I think the concern also comes from why you guys raising this. You gave the ownership argument, but there is a concern that are you raising all of this money because you fear also having to burn a significant amount of money?
Sure. So, candidly, transparently, and maybe it'll be difficult for some of the cynics to believe, right? But this financing was 100% pure just to increase domestic ownership, right? That's why we had demand from foreign investors at better prices, right? We didn't take a single drop of it. We took 100% domestic ownership, and these are all quality names, right? Some of the names that I mentioned. And so, this one was for domestic financing. And even if you look at the IPO, right, that we're hoping to do, sometime next year, the main objective is so that we can become that Indian company, right? Become an Indian listed company, tap into capital markets at scale. So that's the primary reason. But what I will say though is that, are we investing capital? Answer is yes. Are we getting the leverage on that capital, right? Where we're seeing disproportionate scale, sustainably all the input metrics on, the curve to profitability for every new store we're launching, how our mature customers are performing on average order values and on margins, all that is going up. For example, our average order value has gone from 450 6 months ago to now about almost 550, and it's expanding, right? It'll be at 550 about next month. And so we are, we're seeing all the right operating leverage metrics, and yeah, we're investing capital. But where's that capital going? Like I mentioned, mainly in the fact that we're launching hundreds of stores a quarter. Most of that is capex and working capital. Not all of it shows up into fixed assets on our balance sheet because we also have OPEX models that we run, like with 3PL partners, third-party logistics partners. But that's where the capital is going. But we are not in a position where even a fraction, like to give you a sense, 60 to 70% of our balance sheet, if not way more, I'm just giving a very conservative number, will remain uninvested. Right, and we see the same thing with Zomato. Right, Zomato is also raising capital. I don't think they intend to burn $2 billion. Right,
yeah,
I think,
no.
But it's good corporate finance.
Well, as I said, I mean, the speculation is that it comes back to the ownership issue.
Exactly, right, and so I can't comment on that, but this is the same direction it's coming from.
You know, we don't know what the government intends to do, whether the government acts, how it chooses to act, how it chooses to respond to the charges that Kate has put on the table, and whether there's going to be any change in regulation or not. But you're going to be filing your papers at some point, hopefully soon. This is going to be a significant risk factor, is it not? Was this a risk factor when you did this round of fundraise, when you did the domestic financing?
Look, not really. I mean, I think we've got... See,
nobody's asked you these questions?
No, people ask the questions, no doubt about it. But to give you a sense, you know, I think that, you know, it's really not about compliance in like the spirit or letter of the law that we are all trying to get to domestic ownership, right? We're realizing, and this is the first time that large internet companies are getting created at scale in India, which is a good thing, right? We should celebrate, you know, companies like Zomato and Swiggy that have created tens of billions of dollars of value, and most of that, especially in Zomato's case, has accrued to Indian shareholders over the past 2 years, right? There are people that, sorry, on a side note, but there are people that probably can retire earlier or can take care of their parents easier because they own Zomato stock. And that's how you build a middle class, right? You own Boeing stock for 30 years and you build a middle class like that. You don't touch it and you create wealth, right? So it's a good thing. But to give you a sense, what we're all realizing as an internet ecosystem is to build real value at scale, right? You know, tens of billions of dollars without having to, you know, be an Amazon or a Walmart, right? You know, to get to that scale, you want to be an Indian company, and it's looked at very positively, not just by the government, but even by the market, shareholders, and the public at large, right? People trust you more. So, you know, it's not really, to answer your question, it's not really about FDI compliance, FDI regulation, right? We've had a decade of e-commerce that's been built at scale in this country, and, you know, we're just a small part of that today, and so are our competitors in this industry.
Now, I'm just trying to understand why it suddenly becomes such a big issue as far as companies like you, and perhaps, again, as I'm pointing out, we don't know. There's been no official comment from Zomato. But, you know, I mean, HDFC has foreign holding, and it's in the banking space. Why are you guys getting so concerned about this?
There's a difference between financial services and, you know, what we're building, which is commerce, right? We're employing, I mean, obviously, you know, HDFC is one big example. There are obviously lots of examples of large Indian companies, right? Like the Tatas and the Reliances of the world. But I mean, that's the feedback that we've gotten, right? In general, if you look at companies, you know, in the Nifty 50, right? Most of them are, you know, Indian owned, and most of them have, you know, that's been the broad example. Obviously, there are exceptions, no doubt about that. But yeah, look, I think, you know, you're right to say that, you know, why has it become an issue suddenly? I think we're expecting that, you know, we will scale, we will create value.
So is this a preemptive move, is my question?
Yeah, look, candidly speaking, I don't think raising this financing is going to change one thing or the other, right? I don't think that it's going to change something for tomorrow morning. It's more a long-term track, right, where over the next 6, 9, 12, 15 months, we keep building Indian ownership.
So what will be the ownership? How much do you dilute with this round? How much do you hold between you and Cavalier? What will the foreign shareholding be, and what will the domestic shareholding be?
Yeah, so, you know, we are, you know, we will own, you know, by the time we go public, we'll own about 20-ish%, right? And there are a couple of, you know, pieces that we're making, a couple of things that we're closing, you know, this flipped from Singapore to India, and just, you know, getting ready even just from a legal perspective to go public in a couple of quarters. But yeah, we'll own around 20%, right, which I think is decent, right? So, like, if you build a large company, that'd be great. But yeah, but back to answering the key question, right? You know, is it, you know, I don't really look at it as a risk factor, right? We are today, like, we're not only FDI compliant, but we've got a long precedent of FDI compliance, right? Before us, well before in this industry, in e-commerce. We are anyway moving towards being a domestic company, but that doesn't mean that tomorrow we become a domestic company, business model will suddenly change, we're constrained. No, that's not the thought process. Business model will stay the same, even as a domestic company. But today these large IPOs, hopefully if you become a large company, what does this preempt, right? This preempts us, I hope, right, and then maybe be optimistic, but in the next 12, 24, 36 months, I think we'll be like a 15, 20, $25 billion company. I don't know when. I don't know if it's 3 years, 2 years, or maybe longer. But it seems like that scale is going to come. And that's what we're preempting, right? We're preempting that, saying that we would like that large-scale value to accrue to Indian shareholders. And now we have an opportunity to do so. So I think that's true for Zomato as well. They started as like a largely foreign-owned company, and over time moved towards Indian ownership. A lot of that value scale happened there. Similar with I'm sure Swiggy over the next couple of quarters. But for the first time we have that opportunity, and so all of us are taking that option. So yeah.
You brought up Swiggy, so I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. It's huge kudos to what Shriyasha and the team have pulled off, and I think it's great for the ecosystem. I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO, I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say, it's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world. And it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale, and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
Have you been able to convince the government, though?
Well, I think I think the government is progressive. They support, value creation and job creation at scale, right? And they've been supportive so far. And we are, honestly in a position where we think of them as a partner. We're always open to feedback. And I mentioned this last time as well to you, right? That even with, let's say, gig workers, right? We are, honest to God, good faith, open to feedback and dialogue on how we can improve. Whether it's with gig workers, can we do more? Today we give insurance, right? 1 lakh cover plus 10 lakhs of term insurance for free. Whether it's with, food compliance across the board. So I think they've been helpful. But, the last thing I'll say is, next time, we're talking to, foreigners, next time there's a foreign, leader in this country, we should say, hey, not only do we have UPI, Indian innovation there, but in India, you can tap a button and your daily essentials will come to you in 10 minutes. That's amazing.
So you're saying quick commerce is like the UPI moment for India?
No, it's world-class infrastructure built in India with Indian technology. And it's making real people, ordinary people, their lives easier every day, and it's improving productivity and the quality of life for tens of millions of people. By Indians. It's not some rip-off of, some American model or some, Chinese model. It is like only in India you get this stuff, which is awesome.
Made in India, right, and made for India for now.
Absolutely. No, we are going to be in India for these next couple of decades. So
So let me end then by asking you, Adit, give us a quick report card of where things stand now as far as stores are concerned in terms of the money that you're making, cash flows, also market share.
Sure. So look, I'll refrain from commenting on specifics, but I'll give you like a broader understanding. So we've obviously, multiplied meaningfully over the past few quarters, right? And I think the performance has been good. We've scaled from, $1 billion 6-7 months ago when we came out there publicly. We hit $1 billion in top line, fastest internet company in Indian history to do so. We've now multiplied on that base without giving much specifics, but I think we'll continue to get multiplier growth powered by the growth that we're seeing in consumption across the board. In terms of profitability, look, we are investing capital today, aggressively investing stores, but we're pretty confident within the next financial year, right?
So how much are you going to be investing, say, in this financial year?
It's obviously sensitive competitively, so I won't say it publicly, but
ballpark.
Ballpark is is enough to give our friends an insight, right? But look, I can tell you this within the next financial year, not for the full average financial year, not at the beginning, not at the end, but within the next financial year, we will realistically be at break even, right? We will hit that milestone within next financial year, FY26. So at a meaningful scale, So obviously we're investing, but we'll hit that again.
And what's the timeline now for filing?
I'm not allowed to comment on that. I already got a lot of heat from our lawyers, right, to do PR, but it's soon. I think in a handful of months we'll be there.
Okay, Adit, we wish you the very best of luck. Thanks very much for speaking with us, and all the best for your future plans, and congratulations on this latest fundraise.
I appreciate it, Shireen. Thank you so much.
Well, with that, it is time for us to wrap up this edition of Young Turks. From all of us here, for now, goodbye and many thanks for watching.